Is the Federal Reserve on a witch hunt to stop the US banking system from interacting with Bitcoin? Let's mine deep. This is Caitlin Long. She's been trying to set up the first compliant, federally regulated bank in the United States that has a direct bridge between digital assets like Bitcoin and the US dollar payment system at the Federal Reserve. But despite her 22 years of experience on Wall Street, complete adherence to state special laws for digital assets banks, and the fact that her bank, Custodia, has every dollar fully backed by reserves, unlike, every other bank practically in existence, the Federal Reserve still won't let her bank have something called a master account. A Federal Reserve master account is essentially a bank line which gives state-chartered institutions access to the Fed's liquidity facilities, including payment services at wholesale rather than retail prices. Without it, banks like Custodia are forced to operate at a disadvantage, relying on intermediaries and other payment technologies that hike up the cost and slow down payments.
There have been factions, it's well known, factions inside the Fed that don't want any private crypto companies to exist, and they're trying to kill us. And unfortunately, they have control right now. And that group wants a central bank digital currency.
The Fed's reasoning, one word: risk. Banks touching crypto have had a bit of a rocky track record, with one of the biggest players, Signature Bank, taken behind the barn and shot during the last round of the Federal Reserve's not bailouts in 2023. But blocking Custodia Bank goes a bit deeper than this. Some regional banks are concerned that if the Federal Reserve does offer Custodia access to a Federal Reserve master account, it could allow for Bitcoin to weave its way into traditional finance systems. This would allow Bitcoin to be used as collateral for traditional finance products like mortgages, lines of credit, and other loans. That would essentially force every bank to adopt Bitcoin into their business model or face getting outcompeted by those who do, creating a rush of banks custodying Bitcoin that may or may not have the expertise or tools to do it safely. But if that risk is truly the Fed's argument for denying Custodia Bank, then they have some serious explaining to do. That's right, we're getting into some banking tea today. A few years ago, a small unknown bank called Numisma Bank also applied for a master account. This bank is considered a Tier 3 institution because it has no federal regulation and no FDIC deposit insurance. Not typically considered at all for a master account access. Yet, just 6 months ago, the Federal Reserve approved a master account for Numisma to the surprise of hundreds of lawyers and banking executives. Weird, right? Turns out its co-founder, Randy Quarles, was the vice chair of the Federal Reserve during the previous Trump administration. So why should you care? Custodia's rejection is another blow to a huge list of targets established in Operation Chokehold 2.0, a non-official but identifiable policy platform of debanking Bitcoin and cryptocurrency companies. With Custodia, however, this isn't an SEC rejection or something related to the current administration. It's a rejection by the so-called independent Federal Reserve, which isn't beholden to the same political persuasion as other regulators, supposedly. Custodia Bank and Caitlin Long are now taking the Federal Reserve to court over this rejection to master account access, filing an appeal to the ruling that barred them in the first place. The case has become extremely costly, recently leading to Custodia having to lay off nearly a quarter of their staff in order to fund the lawsuit. The last person to take the Federal Reserve to court and successfully win was a journalist named Mark Pittman, beating them in a lawsuit around their lack of transparent practices in 2009. Don't Google what happened to him 3 months later, though. Should Caitlin Long and Custodia Bank eventually compel the Fed to give them a master account, it would change the way the entire Bitcoin industry connects with traditional finance. So, how does she feel about her chances? Why don't we find out? Don't miss Caitlin Long, Backstage. What is the mission of Custodia Bank?
Building a safe and sound bridge between the traditional and Bitcoin ecosystems that is compliant and meets the highest standards of bank regulation.
And so you had an ongoing, case. You were suing the Federal Reserve. This year, a judge dismissed your lawsuits challenging the Federal Reserve denial of a master account, and you guys appealed. What is the current state of that?
The appeal is underway. We filed our brief, and seven amici came in, 7 amicus briefs. There are now 3 former U.S. Solicitors General involved in our case on our side, including people who usually face off against each other, the Solicitors General for Obama and Bush, and they're both on our side, along with former Solicitor General of Virginia, all lined up against the Fed. The Fed's brief is due at the end of August.
What happened? Why did you decide to sue in the hope? Because it's been a long time.
It has been a long time, and it's wrong, and it's protectionist. It's the banking industry trying to keep competitors out, and the regulators aiding the industry in doing so. It's wrong. But we were working, the state of Wyoming actually was working with the Fed on creating a new type of bank charter to safely service the digital asset industry. It would have been it is a non-lending charter. One of the problems with Silvergate and Signature, and one of the reasons they failed, is you cannot mix leverage and the deposits in the Bitcoin space. And that's part of the reason those banks failed. And so this was a charter designed to service the industry and literally the hot money needs of this industry. So the business model is the banks hold 100% cash to back customer deposits. So if there's ever a bank run, people just cash out their money and go, and the bank's fine. And so the state worked with the Fed they had over 100 meetings. We were the first one to really dig in. We applied to become a Fed member bank as well. We were making all this progress. And then all of a sudden, after FTX failed, boom, we were shocked. We were surprised that we were denied. And what came out in the lawsuit is that it was a Warrenite, Michael Barr at the Fed, who made the decision to deny Custodia 2 weeks after FTX had failed. And then he had a meeting, and then within a couple of days, the first draft of the denial letter appeared, that the banking industry is in control of monetary policy, including decisions to pay interest on reserves to the banks, and that those decisions are not made by politically accountable people. They're made by private citizens. That is one of the issues that was raised in our lawsuit, and there was an incredible brief filed by one of the former Solicitors General, Paul Clement, who pointed out that that structure is unconstitutional. It violates the Appointments Clause of the U.S. Constitution. If someone is doing U.S. government business, they have to be accountable either directly or indirectly to the U.S. president. And of course, the Federal Reserve Bank, those 12 Federal Reserve Bank presidents, which are appointed by the banks, are not. Well, Congress set up the structure of the Fed in an unconstitutional manner, and it'll be interesting to see if the appeals court picks up that issue in our case. It is in our brief. Somebody pointed out to me that there's a cruise missile pointed at the Fed. And to some extent, I can't comment on that. I can just say that that yes, it is the constitutionality of a regional Federal Reserve Bank president making a decision about who to let in when they're appointed by the banking industry themselves, and arguably, you know, they see us as competitors. We're really not, but they're trying to keep competitors out. That's not constitutional, and that may potentially be part of the decision in our case at the 10th Circuit.
Or a free market. You know, the U.S. is all about free market, but we're not really free.
Oh, we're not even remotely close to free. When you see what the SEC did last week after creating SAB 121 in violation of the Administrative Procedure Act, and then saying, oh, just kidding, the certain large banks get exemptions from the rule, but the crypto industry has to comply with it. Do we think that there's rule of law in the United States when you see things like that? It's blatantly protectionist. It's blatantly corporatist. It's insane, and it's illegal. And Congress was the one in 1913 that gave that power, the power to print money, to the private banking industry, to these 12 regional reserve banks. It wasn't until later that the federal agency overlay, the Board of Governors, was instituted over those 12 regional reserve banks. But basically, those banks voted themselves a structure where they privatize profits and socialize losses. And ever since then, we've had a financial system that has those characteristics, unfortunately.